Face. Waiting to go live right now. Oh wow, am I live already? Cool. 365. Shake my hand. Hope you're doing well. I just want to quickly drop this link to the public Telegram group because I wasn't really sure if I was going to be able to go live. Okay, I was not really sure if I was able to go live today. And so I just want to quickly let people know that I actually did manage to go live. But yeah, I hope you guys are doing well. We're going to do some market talking. We're going to look at some market reviews. We're going to look at what I think is going to happen tomorrow with NFP. We're going to also look at a way, I've been going over this with a private group, quite, clinically, so that people understand how it is that you go about reviewing markets and almost like understanding. Shake my hand, buddy. I see you there online. If you're online, if you're watching this live, please do type something. Just let me know who you are. I just want to know if there's actually in future, if a midweek reviews would work for people around about this time, 7 p.m., preferably on a Wednesday to make it really midweek, not on a Thursday. But yeah, just shake my hand and let me know if you're watching live, even if you join us later on. Yeah, so long story short, I just want to quickly have a look at that particular situation. And also just kind of like deal with it, right? Deal with it, give out, my thoughts on things, on why I think things are gonna go the way they're gonna go. And then we can then look into that later on, right? So lighting in this office or this thinking room is quite terrible today. I do apologize, but you're not here to see my ugly face, right? We're here to talk charts, right? So look, a lot of things have happened, right? And I think the best thing to do is to just get on with it and just share my screen. Why do I feel a little bit unprepared? Right, there we go. There's my screen. Right, so a lot of stuff has happened, man, and I want to kind of like cover as much of it as possible, but not go over an hour. All right, I do, as a tester for a midweek thing, I don't want to take people for granted and just yap until kingdom come. Right, so in front of you should be my charts. You should be looking at, hey, okay, cool, Mr. Linus, I see you. Alvin, I see you. Togozil, I see you. Thanks, guys, appreciate that. Thank you so much for complying. It's just nice to know if there are people watching. So I'm going to cover a couple of things, and then those who are with us will be with us, and those who will watch later will watch later. Right, so, there's a terrible, disgusting, and I'm just speaking freely today, habit of people assuming that because it's now 4:30 p.m. and in the summertime, when time zones switch and all that kind of drama, sometimes it's 3 o'clock or 2:15, whenever they believe that the stock market is open, it's now time to buy NASDAQ. And if you go right now to a public Facebook group called Volatility Index, I've been trying to post a lot there, trying to engage in minute debates. So someone will be like, buy this, and I'll be like, no, it's not going to work, it's going to sell. And then people just come and laugh and make fun of you, and then 3 hours later their stop losses are hit, right? And so similar stuff happened today. People say buy NASDAQ at 4:30 p.m. and all those people have lost money. Right now this is really not a fundamental difference of how you feel, right? Markets are not about how you feel. Market speculation has got nothing to do with how you feel. I'm just going to kill my video just to give me more space to work with here. Markets are fundamentally about money. You have to learn to read which side money is edged at. Now, we can do it from a structural technical analysis perspective, and that's perfectly fine, right? You can do it from a fundamental analysis. It's also fine, right? I'm not here to fight about strategies tonight. That would be a fundamental waste of time. But if whatever strategy you're using does not know how to read market structure correctly, you are going to be on the losing edge. So today, what I want to do is actually to offer you guys fundamental perspective of the markets. Now, I'm not a fundamental trader. I understand fundamentals. I'm not a fundamental trader because the way I approach the markets is I look for the money. The money will always give reason for the fundamentals, right? And a lot of people believe the fundamentals move the markets, and we can agree to disagree on different aspects. If you mean the amount of money based on a decision is fundamental and therefore moves the markets, I agree with you. But if you think news events move the markets, then you're terribly mistaken, because by the time the news is out, the plan for markets to move up or down had already transpired, right? So I will, and we've done this weeks and weeks in advance, traders war room, to kind of like showcase that this is generally how it works. So let's talk a couple of things. I've got a couple of tabs open here that I would like to run you through. And let's look at some stuff, right? So NASDAQ is a popular asset that people love to trade. It makes a lot of people money and a lot of people lose money, right? So NASDAQ is basically, the techie mega cap companies, right? So now, whether you know it or not, markets move in 3-month phases, right? So we call those financial quarters. They take profit in a year in a 10-year plan. In those financial phases, those quarter to quarter to quarter, companies have to make sure they do what's known as earnings report. So I own a couple of shares. I buy a lot of stocks, both to trade and to own. And as a shareholder, not as a trader, as a shareholder, I need to make sure that my investors are doing well. And one of the ways I do that is to sit through these earning reports and actually understand what the CEO of the company thinks of the company, the direction, how was the sales, the revenue, the debt, resource allocation, liability, the P numbers. There are all sorts of things that come in to factor in what's going to be a good decision or a bad decision, right? And this is literally common play all the time in the stock market. You can't move out of it. When that is being done, right, those earnings reports have to be made public. So they are published, right? And this week was the week of mega cap earnings report stores. We were expecting these data points to give us a good indication. And remember, it's the beginning of the year. So what you want to know as a shareholder, or as a future shareholder, or as an investor, or as a bloody trader is simple. What's the direction for this year? Because if we can get that direction right, we can start to build momentum. All right. Now, think like, moving forward, every time you make a long-term trade, short-term swing trades, or short-term like 2 weeks, 3 weeks, 4 weeks, I want you to always ask this question. If I was a billionaire, would this be a good idea? The problem with retail traders, and you'll see it in my trading psychology course, which I hope to fully do without even using a single chart, because that's very important as I teach about market conviction, is a lot of traders are trading for tomorrow, today. Right. And by tomorrow, I literally mean tomorrow. They have no long-term perspective of their financial growth, not long-term perspective of swing trading or how long. I'm simply saying there's no long-term perspective of being wealthy, right? It's like an end goal. You trade today to make money today. And because of that, it is completely unsustainable. Now, if you start to think like someone who has money and therefore no need for money except for the engagement of making more money for a lifetime, like a rich investor or a billionaire or hedge funds or institutions or banks, then you can slowly start to see that markets move very fast in a very slow way. And because of that, something being down today and tomorrow and next week and next month is not a big deal in the bigger spectrum of things, right? Today is Thursday. I'm doing this for NFP specifically and just market coverage. Tomorrow, Friday morning, before I disappear for the day, I will do a market cycle video and include crypto analysis in it. If I do both tonight, this video will be too long, right? So tomorrow morning, before I disappear, 10, 11 a.m., I will have uploaded a market cycle. Oh, I hope to have at some point tomorrow, I hope to have uploaded a market cycle video. But because I think if traders start to understand these cycles, there'll be less panic. Right. Now, let's look at NASDAQ from a technical perspective, and then we can talk about a couple of things, the underlying pins, right? So let's say, let's go back 3 days ago, right? 3 days ago, so Monday, Tuesday in the markets, would have noticed that NASDAQ found some bottoms. About 23,365 traders, were sending me screenshots. I was having multiple conversations with different people about NASDAQ buy. Some bought it 13,800, 13,900, 1,400. Inside here, there were multiple small demands. wanting this to be happening. I've got a couple of people who took this trade from the actual traders war room that we had, where I said price had touched a weekly demand, but personally Leroy said he was going to buy a little bit further into the zone. So I was not in any of these buys, but we spoke about this, right? So when this finally happened, a lot of traders I know of swooped in, and that's perfectly fine. I am happy for you. The question is, are you going to hold? Is price going to ever come back? We have to deal with all those things. Now look at the daily chart from 3 days ago, right? So this is now, we're looking at about the 28th of January, which I'm hoping was around about Tuesday, Monday, or even better. 28th of January was last week, actually, last week Friday. So we're looking at the close of last week, which is perfect, right? So you start your week with the market that's already here, where price is already up there. Let's say you haven't even put in a trade yet. Let's say you haven't factored in that this week there was ADP on Wednesday, 3 massive banking announcements on Monday, on Tuesday, Wednesday, and Thursday, and the fact that there's NFP tomorrow, Friday. Let's say you are completely clueless around that. Buying here already is absolutely nuts. All right. I mean, there are multiple trading strategies out there. I get it. But just buying here is absolutely nuts. But buying here also always tells me that you still don't really know where price is going, because if you buy there, it means you have no, you actually have no, collection of price points, right? So you're one of those people who believe markets are completely random, and because something is now buying, this is now momentum, and therefore you can finally buy. Where do you put your stop loss when you buy somewhere here? These are some of the tough questions. I know a lot of you are going to tell me to go down to 15 minutes, 1 hour, but it doesn't matter, because all of those levels are somewhere here, which means you still need to tell me as a trader, does it seem wise to put a stop loss there just because you found a 1 hour demand? Your 1 hour demand or your 1 hour support level is nowhere going to tell you to put a stop loss there. And because you're a retail trader, I can guarantee you, most of you don't have accounts that will be able to hold, let's see, there's about 13,800, although about 1,000 points on the NASDAQ. Most of you cannot afford a stop loss that big, but let's say you can afford that. That means you need to at least get 1, 2, 3 so that you stop looking like a fool to your account, which means you have to be able to hold the trade up to somewhere there, fair between there and there. And most of you definitely cannot do that, because some of you on these public forum groups, I've noticed, think it's absolutely crazy and impossible to hold a trade for just 2 days. So you have to think, would a smart money person buy there, or have they already bought? Or have they already bought here and they're waiting to sell somewhere, right? There was a clear supply when Monday started where price was going to get in. But before a supply can even be, spoken about, because once you start to chase where price is going, remember, your psychology has created blinkers. You are already chasing money. If you chase money, you're going to run for the rest of your life. If you ask most of the students who've been with me for a very long time, I'm a pending order guy. I never do market execution. I always wait and wait and wait for price to come to me. Because if you see this and you see buyer's momentum, all you're thinking about is buying. Because in your mind, you're just doubling your account, right? And you're forgetting basic things. If you see this and you buy and you see a supply, let's say I've taught you supply and demand, and you understand that there's a supply there, you're still chasing money. Because what you're going to forget is a simple tool that we have in our model too, which is called the Fibonacci. The Fibonacci tells us one thing and one thing only. Markets move in phases and in legs. We call these legs in the academy, but they really are market phases. For every phase is a smart money order block. When you draw, and I'm sorry about the lines, let's get out of my work chart. Let's find a fresh NASDAQ chart where we can work without all these lines, because then we're going to have some people thinking those are support and resistance lines, and we don't do that in the academy. Right? There's some brokers I haven't used in a long time. Okay, this looks just terrible. This looks just terrible. I mean, I could remove the lines completely, but my goodness, drawing them back is always painful. Drawing them back takes forever. Let's try this broker. I see a clean broker. There we go. Fantastic, a clean broker. Right, so this is a clean chart. None of my key points are on, and I'll simply say, right, swing low, swing high. This is straight out of module 2. Right, so you know me, I've delayed as much as I could. I can't do it delayed any longer, giving people access to module 3 because my goal was to get people to master the basics. Module 1 and module 2 should be enough for you to be profitable. We've created 108 millionaires from just those 2 models, right? So there it is, the string high, string low, golden ratio area was hit. Right, I can guarantee you now, because I run live trading every afternoon in the New York Times anyways for about 2 hours with senior traders, and a lot of them have got massive lot sizes selling here. They are selling exactly where retail traders are trying to buy, right? So one of them is right and the other is wrong, and I can tell you right now, retail traders 9 out of 10 times are wrong, because markets came to a fib level where it was now time to stop pulling price up. Why would you pull price up? Because you always want to sell as reasonably high as possible. Sell high. So if your last sell point in the market was here, which it was, we're a bearish engulfing pattern after that drop. This is a high or the higher high or the highest high. So you get a simple leg that creates a lower high. Following after that, you create the first phase of a leg, and the completion of that leg, you have a perfect Fibonacci and a downward trend. So those people who bought down here have decisions to make. Take profit, wait and see. It's all up to you from a technical perspective. I don't want to get lost on the NASDAQ chart for too long, because there are a lot of things that you guys don't know that I want to tell you about. Now let's break down NASDAQ, right? Let's go back to my chart, because moving forward, we won't need to focus on it. And it's really important you know these things. Because I said it is a big earnings week in the market, a very big earnings week in the stock market, stuff that you won't even see here. You see, this is the Forex factory. It won't even show up on these news events, because a lot of Forex traders and retail traders only know Forex, and then they go to do boom cash and synthetic indices, and then some of them dabble in crypto. But they want to trade NASDAQ, but they don't want to understand its components. NASDAQ is the top 100 tech bubble stocks. Now let's look at the earnings of a couple of mega caps. For example, Netflix. Everybody knows Netflix and chill. Look at that. You see, when I type in Netflix, there is the ticker. Look where it belongs. It belongs to NASDAQ. It's a mega cap. Check the state of Netflix. What's this? Pro gap. A gap to the downside. Gaps are the biggest form of imbalances. We love trading imbalances. Imbalances is where smart money dominates. When I see a massive imbalance like this, I always wait for price to push to the imbalance, and then I start to sell. Now, those of you who are part of my Wealthy in 3 Years program, but didn't join in October last year, but we joined in 2019, 2020, you know we bought tons of Netflix. In 2020, I told you guys to buy Netflix because of COVID. It was an obvious, everyone being home, Netflix, Zoom, we bought those stocks up because it was absolutely phenomenal. It was going to pump, right? So if you go to 2020, somewhere in here, you see that that's the Zoom, that's the COVID candle, March, where risky assets just boomed up. Now, 2020 took 2 years for price to really accumulate a lot of value. So if you bought the stock with me here up to all the way there, the stock gave us almost 140% back on our investments in 2 years. But since recently, and by recently, I'm literally referring to November last year, December, sure, 2 red candles is not too bad, but look at the month of January, right? Since the month of January, all the way till today, today's been the 3rd of February, markets have wiped out 73% of that particular stock. That's bad. It's not only bad for Netflix, but it's going to impact who? The bigger basket, NASDAQ. But that's not really an issue, because I want you to know I'm buying the bottom. I've already started buying more shares first, but sooner rather than later, I'm going to be running trades on arbitrage, actual trades on this thing, and I'm going to hold, because this is a clear winner. Netflix is not going anywhere. All right, long term, it's streaming, its streamers are going to be around. Just because you share your Netflix password with 20 people does not mean this company is going to crash, but it is a perfect buy low moment. PayPal was in every single headline. Actually, at some point, it was leading crypto, right? PayPal was going to have this massive conversion of crypto, and I still think it's going to happen. PayPal, as you know, is one of the currently in the middle between me sending you in America or in Kenya an internet banking transfer where I go physically to my bank, fill in massive forms, get charged about 4% of that amount in fees just for you to receive that money in your local bank. PayPal is simple. Do you have an email address? Fine, link it to your account, send them money. We'll just keep $10 as a fee. That's what PayPal did. Crypto is 10 times better than PayPal because it's instant and cheaper. Here is PayPal. You see the zone is marked. You see, like, when you see my charts like this, it means I already anticipate where prices go. Now, whether you believe me or not, this zone was marked last year. I don't know when the drop is going to happen, but when the drop starts to happen, I can quickly make sense of it, of when and what to do. If you look at PayPal, which, by the way, is part of NASDAQ, you can see, like, just in the month of, this is February, right? We'll talk about that. Let's just look at January and February, PCP 365 candle. Netflix has dropped 36%. But if you extend this all the way from its previous all-time high, which is like October. Now, again, banks think in 3 months. Well, let's look at this. October, November, December. Netflix had poor financial quarters in the last financial quarter of last year. Why? Well, because most countries are getting vaccinated. Most people are going back to work. So naturally, as a business, as Netflix, you're going to feel that shift. People are not going to be streaming and ordering, the most expensive services anymore. No one is watching Tom and Jerry at 10 a.m. Most people are back to work. Something like that, right? We can use that as a simple thing, but these are terrible numbers. But they had a catastrophic effect into January, right? And February, and there it is, prices rushing down. I don't even know if this demand is going to hold because I don't like the distribution. I can break this chart down, but because of time, I want to keep it, keep this video short, right? But now this is the biggest shocker. Last night, Facebook numbers dropped. Facebook is a $900 billion cap company. This is going to impact Forex. I know someone is waiting, going, what does this have to do with Forex? What about tomorrow? It's coming. This is it. The thing is with you, it's not you, not 365 students, but the general public, no offense, because you have this retail trader mentality, which is really the same as putting noodles in a microwave and waiting for 2 minutes and hoping for a miracle. It is almost difficult to penetrate you. Now, if you look at the Netflix chart, because I always talk about primary markets, there are primary markets that move first and then the rest of the clusters follow. The Netflix chart and the PayPal, especially PayPal chart, look like this. They look like price is about to get to a demand but has not arrived. Facebook arrived at a demand. Facebook last night broke that demand because of data. Once again, this is not a penny stock company. This is $900 billion we're looking at. We're literally looking at a $900 billion company by itself. Why is Facebook a big deal? Well, because Facebook is not about Leroy posting a picture for 365 and getting 3 likes and thinking my job is done. Facebook could not be bothered about my Facebook page or your personal profile. Facebook, is basically the hub of small, medium, and large businesses. Facebook stopped many years ago being about poking. Remember when we used to poke each other on Facebook? It stopped all of that. It stopped being about that. Facebook is now the biggest business advertising platform. Hence, it's worth $900 billion. You would think something with $900 billion would have multiple checks of multiple stability points. Facebook is going through tough times. Well, how do we know? Because the earnings that came out yesterday, guys, were disgusting, right? Let me just quickly see my notes. Right, so yesterday alone, Facebook fell by 23%. Yesterday alone, Facebook fell by 20% when the numbers came. Do you guys see this? One would almost, if you have terrible eyesight or you just don't pay attention, you would assume there's some uptrend going until you realize there's a bloody gap. Look at how wide this gap is. This is disgusting. Now if you want to see things better, obviously Hakimi Hashi is just simple. There we go. There we go. And this started last night, literally after hours trading. We made a quick sell for this one reason, right? First of all, I thought these numbers were going to drop on the 10th. I was so surprised when this started to happen. 23%, like I said, as you can see for yourselves there, in one day. And the reason for that is these guys are looking at about a 7% mean when the expectation for Facebook in terms of returns on investment is supposed to range between 15 to 20%. Now, Facebook stock is doing bad because of this. Yes, okay, but what does it really mean? Like, you have to think like an investor. I know if it's new to you, it'll come, but I'm doing these videos to just keep pushing that mentality. Think like a billionaire. You got to think like a billionaire. If the biggest advertising platform is reporting 70%, returns versus the 20% that they forecast, it means all those small businesses, all those medium businesses, all those large businesses are failing, right? That the marketing that is supposed to bring the customer incoming because price is going up because of inflation. I covered all of this in my videos last year. Right. Last year I covered 10 NFPs. Right. I didn't do the January and I missed one because I was busy. Like, my partner was running a fundraiser in October, so I didn't even cover it. Right. 365 was involved in a fundraiser for someone with congenital heart problems. So I missed that Friday. But all the other 10 NFPs on my YouTube channel, I would release a video Tuesday, Wednesday, and I was right about the data. This is why. Because the logic is quite simple. If all these companies are struggling, why on earth would be the biggest advertising platform do well? So Facebook has done absolutely terrible. It is the worst so far. Who does Facebook belong to? Again, NASDAQ, right? So now weighted indexes is what you guys are treating. When you look at NASDAQ, it is a weighted index and they are power players. For example, it's not all bad, right? There's someone like Tesla. Tesla, I told everybody in the public group, I told you guys in May last year, buy and hold. It was a simple instruction. There it is there in May. We are still holding. Tesla then created this beautiful level that we bounced off from and then broached. We broached this a little bit last week, and then Tesla's numbers came back okay. Tesla's numbers are okay, but we don't know yet. Like, so my thing with Ellen is your numbers okay because you've got a backlog of stock and you think they're going to sell, or are they actually going to sell? Unfortunately, that answer will only be answered in the second financial quarter. But Tesla numbers were okay. Who's Tesla part of, by the way? NASDAQ. They were actually in the S&P 500 when they first launched, and then they moved to NASDAQ. Right, Apple is the MVP, guys. Apple is literally carrying the stock market on its back. Their numbers are great. Their investments in metaverse are great. And so the stock market is happy. Markets bouncing off very, very, very strong levels, etc., etc. Here's the juggernaut. At midnight today, in South African time anyways, Amazon, the biggest earnings report, is meant to drop their final figures. Amazon is literally a Moses, right? And it's either Moses believes he can part the Red Sea or the children of Israelites get to drown. Amazon numbers are not yet out, and we've already got about a 3 to 4% gap in the day. People are scared. We are in the cycle of market fear. Now, here's a terrible thing about market fear. Like I say to you guys, tomorrow and only tomorrow, I'm going to share with you guys a market cycle video, and I'm going to link it to what I think is going to happen to crypto. On the 8th of February, I am predicting some interesting stuff in the crypto markets. Now, check this out. Market cycles are simple. You get bad news. For example, bad news is PayPal. PayPal fell first. It was one of the first mega cap earnings. So PayPal fell. And then after that, you got slightly more bad news. What was the slightly more bad news? And that people like, what? But people like chilling, right? Netflix and chill fell. So now, if you were thinking it's a bit too early and crazy to be fearful and panic, then Netflix drops. Now, who's dropping? Everybody starts to dump. I mean, I tweeted today on the 365 Trading Academy official Twitter page. I was literally trying to buy myself lunch in town, and I heard two people talking. This one guy was like, sell your Bitcoin now. Sell it all. Because if you don't sell your Bitcoin now, you're going to lose all your money. And that's retail trader logic. No, selling now means you're going to lose all your potential money, right? You're going to keep the change after incurring loss. Selling now means you're going to lose. But market cycles talk about the psychology of humans. So PayPal falls, the Netflix falls. This is not bigger and bigger because of what's falling in the logic. The circles are getting bigger and bigger because of the fear, because all of a sudden markets price in everything. I talk about this in my module 1 when I'm teaching people to trade. You should check out our course, by the way. I'll put the link down below. Right? Markets price in everything. So markets all of a sudden start to price a roll down effect of fear, right? So oh man, this would have been so much cooler if if I drawn this more accurate in its set, like nice 3 little fat pigs. But you get the point. So obviously PayPal is down, Netflix is down, and then boom, our mega hero Facebook is crashing still, right? And I can map Facebook. Some of you have forgotten that Facebook had a serious crash sometime last year where WhatsApp and Facebook, it didn't work for a day. And then there's some silly story that they spin, and then there was a massive dip. And then exactly 4 weeks after that, they announced the metaverse for the first time. All of a sudden, Mark Zuckerberg was like, oh, metaverse, this, metaverse, that, right? Nothing in the markets is random. But look at this. All of a sudden, there is a panic cycle. So Amazon numbers are not yet out, but already markets are selling off. Why? Because of this. There's a fear cycle. Somewhere along the line, we'll get to a beautiful bottom. Now, Amazon is our hero or our worst fear. Amazon literally now has the potential and the ability to carry the markets, and we'll know tomorrow. If you're in South Africa, Kenya, if you're in Africa, based on our time zones, when we wake up tomorrow, we shall see the final impact. But as we speak right now, it's dropped 3% for no reason. No one has dropped any news. Markets are just absolutely scared. Jeff Bezos, stepped down as CEO. There's a new CEO. He's kind of like newish, not that new, but he is new compared to someone like Jeff, who's been around since the 1980s. So markets are going to play with everyone's emotions. But the bigger point is it's also part of NASDAQ. So when I look at NASDAQ, from a supply and demand perspective, without even knowing all these fundamentals that I've just walked you through, all I am looking at is the flow of money. And I gotta keep my heartbeat to that. Now, this Wednesday, and I just went all over the place and skipped my notes, but you guys, hopefully you get the gist. I'm hoping you get the gist. Now, this Wednesday with ADP. Now, ADP is a precursor to NFP. Let me kill that video. I don't even know when it came back. ADP is a precursor to NFP. Now, the way ADP works, guys, is ADP is a private company. Here they are here. They're a private company. I actually had so much fun reading the report earlier on today. If you want, just type ADP report if you're into these type of numbers. I am obsessed about financial markets, right? ADP is a private company. It's a private sector company. Therefore, for all intents and purposes, we treat this as just an indicator. We don't treat it as the Hail Mary. We don't say it because ADP was negative, therefore NFP is going to be negative. We do say that we've seen and noticed a lot of correlation sometimes, all right? But what was interesting about what this private company put together, which is not the absolute official data, the government will always be the official data, which is NFP on Friday, was that they found a negative, guys, a negative 300,000 jobs, right? So technically speaking, if you were to really break down what that really means, it almost means like almost companies let go of 300,000 people. Well, 300,000 jobs basically means company cut, 300,000 jobs. And wouldn't it now make sense all of a sudden when we're looking at these earnings? Because whose earnings are Facebook's? Which financial quarter? Netflix, Google, Tesla, we're looking at the previous financial quarter. You guys are aware of that, right? That this data isn't talking about the month of February, because today is the 3rd of February. This data, ADP here is calculating the job count for January, December to January, right, on a seasonal adjusted basis. But the financial markets reportings on stocks are referring to the previous financial quarter. So that's October, November, December, right? So now I'm trying to teach you how to work out how to correctly predict NFP, by the way, if you needed a heads up. So this is how it works. Now, if I'm looking at stock figures right now, and they're covering the previous financial quarter, and I can see that their numbers are terrible, and therefore the CEOs can't even predict the future for the first financial quarter of 2022. It ain't surprising that negative 300,000 numbers dropped. Like, it's not shocking. These companies were struggling last year. Now, if you read this full report, basically it accredits a lot of the stuff to basic Omicron. All right, so if you calculate when did the new variant come out towards the end of last year, Omicron set the whole markets back. And if you look at this graph, which I think is just brilliant, this is January 2021. So these are job numbers, right, that are done by ADP. So look at January last year, 196K, 180K, This is 2021. We had COVID in 2021. We had the Delta variant, we had the variant before the Delta, we had the Trump saga with Biden trying to vaccinate people, we had Johnson & Johnson, terrible vaccines, we had the 5G gang, we had all sorts of drama. So the job numbers kept going up and down. We also had QE, but I don't want to get into that because I keep covering these things, building a market story for you guys on the channel. So please do subscribe, but also watch, put that notification on. Yes, some of my videos are long, but some things require time, right? This shortcut noodle lifestyle won't help you, but you can see the ups and downs of the market. It is the first blimmin' time that things are this bad, right? Curving out. Now, let's look at the forecast for NFP on Friday, because that's already out. So let me close this. Look at this. So tomorrow, Friday, the experts, the financial analysts have pulled some polls. Right here at the top is the previous. Previous means last month, January. Last month, January, we got 190K jobs, all right? Was it what we wanted? We'll find out. I don't think it was, but that's what we got. This month, and remember, January numbers are reflective of December. So in December, the previous actual number was 190K. That NFP came out in January. Now, tomorrow, the first Friday, which is February, they are saying these will be the January numbers. That from 199K of December in January, in fact, the jobs dropped. They dropped to 110K. Now, let's quickly go back to ADP. What was ADP thinking, right? So ADP in the previous thought, look, we're gonna be terrible. We're gonna go for 776K. All right, so that's what they thought. And then the forecast for tomorrow, or for this past Wednesday, I apologize, was we're gonna get about 185K. So ADP thought there was gonna be a drop from 776, but the drop was gonna go all the way down to 185. Not a big deal. Now let's look at the ADP graph again. So once again, the December job numbers that they had was 776, and they thought it was gonna drop to somewhere down here at 185. But they were absolutely shockingly off, because it dropped even further, right, to minus 301K. Now let's look at the NFP numbers. The NFP is saying there's gonna be a drop. So both these statistical data points are pointing to a drop, right? This one, and this is a big drop, guys. Can you imagine the drop between 776 to 185? That's almost about 70% drop. It's actually dramatically big, but it went even lower. NFP tomorrow is saying we're gonna get a drop, but we're gonna shed. We are going to shed. We're going to lose, give or take, about 80,000 jobs, right? Because it's like 199 to 110. And if that's the case, and the market gets 110, 115, 105, somewhere very close to 110, then things can continue as normal. The problem is that's basic level. I mean, it's even written here, like, where's the number? A change in number of the employed people during actual greater than focus is good for the currency. Which currency? The dollar. So if tomorrow this number is 150K, so they're expecting 110, but we actually get a shock that there was an industry that actually started to secretly hire a lot of people, and the number has gone up to 150, then according to basic 101 baby pips fundamental stuff, well, it's going to be good for the currency. What's good for the currency will strengthen the currency. But the reverse is also true. If the number is drastically below 110, for example, here, if it's below this, then we're going to get terrible NFP numbers, right? And if we get terrible NFP numbers, that surely is bad for the currency, right? So the dollar will probably fall. Okay, that's one way to look at it. Let's chop it up that way. Before I now break down all of this, I have this tab open for you. This is me in October the 5th. This is the bloody Facebook chart. In October the 5th was the beginning of the financial quarter of the fourth financial quarter last year. I told you that this was going to happen this year in October last year. I did it not because I am a guru or a genius, and I appreciate the compliments, and I always appreciate the feedback on the course and how it's helping you guys. But I just want to be clear. I am no magician. All I've done is study the material that I've given to you guys in the academy. But this, I just read structure. I'm like, okay, what is smart? If I was a billionaire, what would I do? This was me telling you about Facebook. Dollar cost average. It's going to keep falling. It's going to keep falling. It will keep falling. It will keep falling. Look at that, 293. This was me in October. I'm bringing this up, man, because, you know, it's just not nice seeing people go through this. What did I say? 293. Look at how it's literally come to the twos. It's gone even lower than 293. Had I said this in October last year, I looked absolutely crazy. But Facebook has gone below the twos. There we go. 287, 293, 300. Now stopping all the way to 237. That's ridiculously how accurate proper supply and demand use is. No magic, no nothing. I explained to you that this is the nature of price. Telsa would drop. Telsa drop, came back to almost 900 at some point. I promise you, all of this was done in October. Where's the Tesla drop? It's an impromptu live, guys. Let me just do my thing. I know some of you want to go cook or whatever, eat KFC or whatever it is you do, but it's just important. It's important that you see this, because one day, and it's not like a threat that I'm going to disappear, but I'm simply saying it'll be nice. It'll be nice. I am dedicated to market education until the year 2030. So I'm here for a very long time. But at the same time, I really need to make sure that people are prepared. Now, you saw on the Facebook post, right? 930. Is going to hit $900. You saw that, right? And I wrote this in October. So let's find October. There's October. As we left, we're leaving the zone. Here's markets coming back to that zone in December. Here's markets coming back to that zone again, right? And a little bit crack and a correction in the system. This is literally what we are offering you as an academy, the ability to read this stuff. So I can delete this because it's disrupting me. Right, now back to NFP. We have to figure out a couple of things. So now let's look at the dollar, because according to basic fundamentals, if NFP is positive, it's good for the currency will be strong. But if it's bad, the currency will weaken. This was the dollar yesterday. Now I can show you, because I know a lot of people say, you know, Forex mentors, you know, they like to act like they know it. They talk in hindsight. Hindsight means they talk after the thing has happened, and then they pretend they knew all along. And unfortunately, you know, while that is true, that is not how I operate. So in front of you is this is a long conversation I've had with 365 students, literally in front of you. And yesterday, before ADP news dropped, all right, and this is this morning. I just want to quickly show you this. This is absolutely important. So this is ADP, you know, last night. So ADP dropped at 3 p.m. yesterday. Now, before it dropped at 3:15 at 1 p.m., I literally broke down. There's the DXY chart, right? And I said, look, man, you see this? Now with DXY, remember every day, blah, 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 right? I don't want to read everything, but the point is, I said, this thing is going to break, right? DXY chart has zero distribution, just angry sellers. So personally, I'm ignoring that valid demand and instead will buy lower after the drama. I said this at 1:30 yesterday. Why? Because it was absolutely brutally clear that even though the chart looked attractive like this, there was a beautiful fib, there was the demand, blah, blah, blah. Markets, generally speaking, will always lead you to the right direction because billions of dollars are invested. This was too easy a trade setup before a news event, which means they use these levels to trap who? Retail traders, to trap who? dump money, but also to trap someone else, someone special, someone who I want to deal with this year thoroughly. This year, my mission, and I'm going for one person, and that's how I built my academy. I focus on whoever is willing to learn, and I always think it's just one person. It could be 100, but my idea is if I can just change one person's life, I've done enough. And this year, the third person who's not a retail trader, who's not a dumb money trader, the third person is someone I want to focus on. And this year, it is actually registered students who now know better, but are not doing better. And I'll tell you why they're not doing better. Because they are chasing money today and forgetting to trade for the rest of their life. You are sacrificing your capital for small gains. This is a trade to take if you think trading is about trading every single day. This setup is a simple classic bear trap. It's literally lined up for you. All right. And I always tell people, when you've got two forget about the fundamentals that I just broke down. When you have two areas of value that close to each other, you just go back to our module 1 in the course. You just come here, and I promise you, between week 1 and week 2, you just rewatch these lecture notes. I know my lectures were 2 hours each. I get that. But the reason why they are that, and the reason why you're still making these small mistakes, is because you haven't mastered all these areas of value that we talk about in week 2. Because you remember, there is a universal law of supply and demand. You gotta sell high and buy low. Smart money is never that impatient. They will never in their lifetime sacrifice for short-term profits. There's no such thing as short-term profits. It's absolutely impossible for smart money to think about short-term profit. These guys are in it for the long haul. So we stick to my rules, please. Guys, I don't want to brag, but one more time. I've been in the game for a very long time. I know of the popular Forex lecturers and Forex mentors. I never want to be one of those. That's why me and my partner, 4 years ago, we sat down and we agreed on an approach that would work best for us. Number one, we wanted to keep our lives private. So I will never, ever, ever catch me doing lifestyle content. You will not see me using cars or money or cash or whatever is cool, whatever you think is cool, and it's fine. The academy will grow nice and slow. I'm absolutely okay with that because I don't make a living off this. I'm running a loss teaching, right? And this is just me. I mean, if you ask me how much I make per hour in my live classes, you'd be absolutely downwardly shocked. And the reason for that is when you grow in mass numbers because of massive marketing and flashy things, you also grow in poor quality. 9 out of 10 times, 2 things happen. When someone joins the academy, it's one of 2. One, they've been watching me for like a year. You're like, okay, fine, you're the real deal. It took me a year, but I agree. I'm coming now. Or 2, they're coming because someone who's already inside can vouch for me. So I grow at the kindness and the behest of my current students. But in that process, I've managed to create 108 six-figure traders. There is nothing special about these human beings. They were not handpicked from the best schools of economics. They went through the fire to get there. And a lot of this stuff was learning basic rules. Here is what we call the urge, the FOMO. What if the buy works? It's not going to work. It is a classic setup. This was on Tuesday. ADP is the very next day. So in this long conversation yesterday, in the academy, I was telling them, listen, guys, this is a clean setup. Euro USD is not going to work. Don't sell it. Pound USD is not going to work. Don't sell it, because everything that I just kept bringing up, you see the scenarios here. This is not going to work. Sell up there. Someone sent this chart. It's not my chart, but just basically saying, I guess is what you're talking about. And daily supply 2 was not going to hold. If you go back to your charts 24 hours later, it did not hold because we could already anticipate. So I interpret and predict fundamental news based on structure because this was too clean, no distribution, and there was anyways just a basic module 1 rule, a lower demand. My assumption is to get down here, you must break that. And if you are serious about bouncing at any level, you must distribute. Distribution means trading a little bit to the side, not coming aggressively. Now, I grew up, I did 16 to 17 years in military jiu-jitsu in the dojo. My father put me there when I was the age of 4. My first black belt thesis is in knife training. So that's kind of like my thing. So if you've seen my old office in the old home, I have knives everywhere, swords everywhere. In my new home, it's actually worse, right? I've got a classical collection because I like the art of war, the samurai art of war. It's how I was raised. I didn't even do sports in high school, right? Because of that. Now, my son is 7 and my little girl is 20 months, and I want them to get into the dojo. I got in at 4. My son is getting in now because he's like his mom, a little bit soft. So he's going to the dojo. My little girl will follow soon. But I'm teaching them by the side archery, like basic arrows. Now, why am I bringing this up? Because it's important, and I'm a terrible drawer, but I teach like this. Even my classes are weird like that, man, and that's fine. Now, if you take a bow and arrow in archery, right, and you put an arrow there and you want to shoot it, the closest thing, right, when I release my arrow, the closest thing that's going to make impact with my arrow is going to be the most devastating impact ever. If I have a target further away between the distance of releasing my arrow to this target, there will be less damage here. That is to say, if there were 2 equally sized human beings right here and right there, and I only had 1 arrow, and the 2 human beings were equally aligned, and they were all coming to kill me, and I had 1 arrow, and I released my arrow perfectly, my arrow would most likely go through human being number 1 and might stab and hurt a little bit human being number 2. But from basic training, I need to be worried about human being number 2, because human being number 1 also slows down, breaks the momentum of the force behind my arrow. Now, let's bring that to trading. If I have no distribution in the markets, 0 distribution, and once again, if price is leaving a supply, this is like a cool class, man, and it's nice that very few people came, and I'm hoping you guys are learning. I mean, I wanted more people to come, but those who come, I hope you get something out of this. Now, here's a demand, literally sitting, coming from a supply. And then there's another demand. This is literally the DXY, right? So we know the basics from module 1, buy low, sell high. We know that, cool. But now, if price doesn't have a chance to distribute from the supply to the immediate demand, and by distribution, I'm saying something like this, right? Something like this. The stuff that we're used to, how markets move in zigzags, right? Some type of distribution. It could be anything. You have to find it, sure. You can find it in smaller time frames, but you also want your big time frames like daily to kind of like confirm sellers, because when sellers want to continue selling, right, they'll distribute, or buyers vice versa. But the most important part is there's no distribution. Think about this as human being number 1 who's going to be right in front of my arrow. That is, the force of the arrow is going to be so strong, it's most likely going to break through human being number 1 and then go potentially hurt human being number 2. Then we can start to talk about fresh touch and retest somewhere here. Or maybe there's a whole lot of power and price can break, right? Which is a different scenario. But the scenario that we had yesterday before ADP dropped was this. There was no distribution, which means it was almost a guarantee that this demand was going to break, which means your stop losses were going to get hit, which means your ability to predict news before it happened accurately was hindered, because anyone buying at this level was also betting on ADP being positive. You were betting on a lot of employment created in January. You were betting on markets and companies doing very well last year, even though we said they were not. Hence tapering, even though we said there were supply bottlenecks, chain problems throughout the whole of December. So that's why if I do the replay now and I give you exactly what happened in the last couple of hours, you will notice that markets just bled through. They bled through this demand. And retail traders, the problem with them is kings of small time frames, right? At least now you guys will have my module 3, this year to handle these small time frames. But my goodness, you see this stuff here, right? And then immediately you wanna comment on Facebook, on a post I made on Facebook, and say you are wrong, ha 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 ha. Profits now, and that time, because markets have hit a demand, right? You're in profits and you've made $3, and you ran to Facebook and you at me. I mean, I get abused on social media. You're like, you were wrong. You said it's gonna break. Right? And this is 3 o'clock. ADP. On the same day, literally 24 hours later, how much have you made? The price has only moved. I must say, literally. I mean, if you think that's money, I don't know. has not even moved 1% up in your direction. The move up between there to there is 0.40. It's not even 1% of your direction. You're already busy at me saying I was wrong about my analysis. And before you finish your supper on the same day, markets take out your little $10 profit. Not only that, drive you down minus $50 and then take out your stop loss. Right, because of this terrible chicken noodle perspective on market timing. Right, now, what are we going to do tomorrow? Me, personally, I am playing golf. When NFP drops tomorrow, I am playing golf. I couldn't be bothered by the markets right now because I am extremely bearish. I am bearish for my trading flow. I am bearish for my corporate clients. I am absolutely bearish right now because I know I'm going to get dips. Overall, with the dollar, I'm bullish because I understand the kind of like climate that we're in. We've been very bullish on the dollar. FOMC interest rate hike of June. Banks thinking 3 months, take profit in a 1 year. So we're looking at the second financial quarter of the year, June of 2022, 365 traders. Don't forget, I say this, June of 2022 is going to be significant for the dollar because it created the bull run, bouncing off a monthly demand. This is a governing demand, and we started to see. So we want to see who's going to take profits after a year. Well, obviously, smart money that bought down here when the FOMC gave us an interest hike. He's already said from March the 16th, he'll be interested in another interest rate hike. Well, wait a minute. What is March? March is the first month, January, February, March. Sorry, March is the last month of the first financial quarter, paving a way for the second financial quarter, where the month of June is. March, April, May. So by June starts on the third financial quarter, price might be ready to take profits from this long uptrend. You see my uptrend from June still intact, still perfectly intact. Is it reasonable to have simply assumed that markets are going to fool me here and come take a demand buy there? Yes. Now, could this demand fail tomorrow? Absolutely, it could. But you are far much more better taking a risky buy here than anywhere else. I will not be buying there. King of small time. All right. Good to see a couple of you guys. Let's see. So we got Botswana, Kenya, South Africa in the house. Cool. Right, locked in. Yes, Kenya leading. Yeah. Good, brilliant guys. Right. You could take. This is a better place to buy. I won't be buying here, right? I definitely won't be, because if I look at my H4, just talking to my market structure, I can understand why this buy is going to work. I can understand why it's going to hold, but where will it go? How far can the buy go? Now, if I'm a day trader and I'm interested in taking a short-term trade, sure, but tomorrow is big day to day. Now, let's see one more time. What are the experts, the so-called, who are always wrong, by the way? Sometimes they can be wrong. What do they think? They think we're going to have less numbers. We're going to have a reduction. Well, what did this fundamental news say, by the way? It says actually greater is good. So if it's less than, if we get 105, 90K, it could be bad for the currency. What is bad for the currency? Well, price has to go down. So they could remove this demand. I don't know. Do you see, from what I've just told you about the arrow example about distribution, do you see distribution yet on the daily time frame? Because I don't. Who's busy WhatsApping me, man? Because I don't see any daily distribution, right? I just see a whole lot of selling. I see market panic. I see market sad that, oh my goodness, 300,000 Americans were affected by Omicron to a point where they lost their job. Now, what does losing a job mean? Because we're going to talk about Powell. I actually don't care how long this video is. I'm so sorry, guys. Stick around for as long as you can, but I want to drop all this information once. Who is Powell? Powell's the FOMC. He's our governor. I did a video about a week ago covering what Powell said the day before in crypto and all that kind of stuff. What's Powell's job? He's the monetary. Every country has a reserve bank governor. Powell's job is to make sure that fiscal policy, which is what the government spends in buildings, infrastructure, creating jobs, has a beautiful, harmonious relationship with monetary policy. Traders, we are here. Monetary policy, interest rates, exchange rates. This is us, monetary policy. Powell, when he sees this, right, as the governor of his country, what do you think it means? Look, if people are being laid off work, the economy is doing bad. But the economy is not just doing bad, the economy is under serious inflation. Oh my goodness gracious. Imagine this, guys. Come on, man. Work with me here. Work with me here. Look at this. Inflation simply means prices are going up because of certain factors. But if bread was $2, next month it's $3. Obviously, I'm being dramatic. It'll be like $2.10 and then $2.15. Hey man, if you're in South Africa, do you guys even remember a time in your life where bread was 5 rands? Because I do. I remember when bread was 5 rands. That thing is now 13 rands. That is inflation. It is absolutely inflation. It's healthy inflation in South Africa a little bit, but basically prices go up. Now let's look at the whole picture for tomorrow. If I have inflation, which we already know we have, why do we have inflation? Because of COVID. What do you mean because of COVID? Because when COVID came, people stopped working. So people didn't go to work. And what did Powell do? Powell came in with a superhero cape and started doing what? QE. What is QE? Quantitative easing. Powell started printing a lot of money. People in America were being paid to stay at home, right? Stay at home. Here's money. Here's a check. Just stay at home. Just stay at home, right? Government checks. We call them unemployment checks. In Africa, we call them welfare grants. In Africa, a welfare grant in South Africa, if you have a child, 350 rands or whatever it is. In America, people are getting as much as $1,200 per week for being unemployed for a virus that they have no control over. Well, what does QE do? Well, guess what? I no longer have to work. Wow. But on top of that, my government is giving me so much money every day per week. Do I care about spending? No, because next week there's going to be another check and then next week another check. So all of a sudden, things like Bitcoin, stocks, risky assets went up to the moon. Why? Because people now have buying power. I'm going to go try and be a little bit risky. If I buy Shiba Inu for $1,000 and then I lose all my money, no worry. Next week, I'm going to get another bloody $1,000. So it's fine. So people started pumping the markets. Now, is that good? Yeah, obviously, if you're in an election year like Biden and you want to make an impact, of course, Biden pushed for more QE. Of course, Powell pushed for more QE. Powell's election for being governor again was just last year. He wanted to get reelected. So he gave people money, right? Simple. But what does that do? Because people have buying power, they've got lots of money. There is nobody in capitalism who is shy to keep increasing the price of goods. Why am I increasing the price of goods? Because people can afford to spend, because people have free money. Now, guys, the more people spend, the more prices go up. But the more prices go up, the more we have inflation. But people are spending because the government is printing $1 trillion per month. It was the most money the Federal Reserve printed in the history of printing money. Now, look at Zimbabwe, printing too much money in 2009 crisis. Many countries have gone through this. QE always leads away to a crisis. You want to think of a much more recent crisis? The global housing crisis of 2008. How did that happen? They gave out loans, money to people who could not afford. Black people, minority, not black people because black people got broke, but black people because of systematic racism that forces black people in the outskirts of economic activity, so they could not afford the loan homes that we're doing. And then hedge funds took the opposite side of the bet because they knew about it, but banks were left carrying nothing. Because when you give me a loan of $500,000 that I don't even have employment to pay back for, where on earth do you think you're going to get that money from? Where do you think it's going to come from? It's going to come from heaven. If I can't afford to pay you back, I'm just not going to pay you back. Therefore, the housing crisis which triggered a market crisis. We have something very similar now in front of us. And I've been teaching on the lost decade. I've been teaching on market crashes. I've been teaching on the Evergrande crisis, and it's happening nice and slowly. Money's been printed, prices going up, inflation, right? That's the combo. Now, at the end of the day, because of inflation, money going up, as Powell's job now to solve the problem. So last day he says, I'm going to stop QE. I'm going to stop printing money. And when I stop printing money, I'm hoping that prices can begin to stabilize. When prices begin to stabilize, inflation will become transitory. Transitory means it's just going to happen and pass. It will stop rising. It becomes transitory. The problem is now, though, ladies and gentlemen, if we can look at NFP numbers historically, because markets never lie. Markets never lie. So I just come here to Forex Factor and I'm like, okay, that's what's happening tomorrow. But what's happened historically? Let's look at the job numbers historically. So you just click here and it tells you everything. So let's you know me, I like looking at things from a year-to-year perspective, right? So where's January? There's January here. So January 2021 to January 2022. We should have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And then tomorrow we'll make 13 NFP reports. All right, cool, clean. But now let's see how many of them were positive out of, okay, well, 13, whatever. We'll ignore this one here because it's just it hasn't arrived, right? No, sorry, February. So this is January to January. We're going to count all 13. Sorry, I'm thinking about February. So we've got January the 7th to January the 8th, which is about 12 to 13 reports. Now, this was a negative. That's a negative. We've got 1 positive, 2 positive, 3 positive, 4 positive, 5 positive NFPs out of 13 reports. Guys, that's not even okay, it's better than a metric pass. And metric is 30% pass, but that's not even 50%. You've got literally 5 out of 13 good job numbers, right? You can even make it out of 12 just to make it make sense, say a year. So to get 50%, we needed 6 out of 12, but we don't. So markets are leaning. So now let's redraw our graph one more time. Prices are going up because of QE. People were getting paid more because money was being printed. But at the same time, because of COVID, we know employment has been going down. No one can go back to work because of COVID, because of Omicron. This is why out of 13 job reports, only 5 are positive. That's good data in isolation. But now we take off our poverty caps because we don't want them. We don't believe in them. Keep listening to the podcast. I'm working on your minds there. Let's start thinking like billionaires, even though we've got $10 in our pockets. As a billionaire, as Ray Dalio, you're looking at this whole thing, you're thinking prices are going up, inflation is going up. There used to be QE, but since tapering has happened, the Fed is now slowing down the printing of money. Wait a minute. If you're going to stop QE, which is printing money, aka tapering, which started already in November, all right, it means people no longer have buying power. So if you don't have buying power, no markets are going to crypto stocks, to the risky assets. So those things are going to fall because those markets are carried by money. If no one is putting money into them, only whales and people bought long time ago, we're going to have a nice gradual trend. But if you want those pumps, those explosive pumps, somebody has to keep putting money all the time. Right, so check this out now. Tapering starts in November. Look at this. No more printing excess money. In fact, FOMC says I'm drastically reducing or cutting this thing. But inflation is still high and prices are still high, but there's no longer buying power. Leroy, why is there no longer buying power? Well, have you not checked? Out of 5 out of 13 NFP reports, how many were negative? Well, a lot of them, only 5 were positive. So most people are still in that group where, you know, they in different parts of the year, not now, but in different parts of the year, a lot of people were unemployed throughout the whole year. But now it's now December, January, go back to work. You've been vaccinated. You are all free to vaccinate. It's not a bad idea to have a midweek review. All right, cool, fantastic. I'm happy to do it because I do it by myself anyways. Right, so now it's November, December, January. Everyone is going back to work. Everyone is going back to school. People are slowly but surely getting vaccinated. But they have less buying power because QE is gone, number one. But now they are facing high inflation and high prices. But what's the bigger problem that COVID did? Supply chains are bottlenecked. Supply means if I have an iPhone in America and my iPhone breaks and there's a small microchip that I need, and that microchip can only be ordered from China, and the ships that come to America from China can't dock or land because of COVID. So the chip is inside the ship, but the ship can't get to America. Therefore, I cannot get my phone repaired. What happens is the few chips to fix my phone, just as an example, this applies to cars, this applies to everything. Because this is what companies just reported in their stock reviews, by the way. The chips, the few remaining chips in America become scarce. When something is scarce in the world, we say the supply is restricted. When the supply is restricted, price has to go up. I'll put it this way. When I teach people my module 1, I always say, I stay in a small town, which I do. My favorite car in the world is a Jaguar. You know, that's what I like to drive. I like Jaguars. Let's say I owned the only Jaguar in the entire province where I stay. But in my town, there were 100 people and there was no other car dealership. There are 100 human beings in my town, and all 100 join 365, do the course and make a lot of money, and all of a sudden they also want to drive Jaguars. But I only have 10 Jaguars. You can't get Jaguars anywhere else in the world. They're just 10, and I'm the only one with the 10. But I have 100 people who want to buy my Jaguars. What's going on? The supply of Jaguar is restricted. I don't have 100 Jaguars. I only have 10. But the demand for Jaguar is unlimited, which means I can tell you that, listen, if you want my Jaguar, I'm going to sell it to you for 2 million. I'm not under pressure to reduce my price. I'm not under pressure to offer you a discount because I only have 10 Jaguars. And out of 100 of you with money, one of you and some of you are definitely going to be willing to do what? To pay whatever I want. So when the supply is restricted, when you have supply problems, limited supply, price goes up. But let's go back to our formula. Inflation is high. Price was already high because of unlimited, uncapped spending because of QE. QE has gone, but supply bottleneck problems still exist, which pushes price even higher. But because price is going high, because of supply chain bottleneck problems, inflation is going high. So all of a sudden, Powell is going, damn, inflation might not be transitory, which means it's a big problem. And then today or this week, companies are saying, yeah, and our numbers as companies are very bad. We are doing very bad as companies. Well, wait a minute. Inflation is bad. Prices are too high and companies are struggling. And then ADP comes and says, guess what? Minus 300,000 people lost their jobs in the last month. That is what we call a catalytic effect of a terrible economy. And it's not the usual videos I do, but I thought it would be prudent to kind of like break all this stuff down. So tomorrow, can I quickly drink something? Come tomorrow. Come tomorrow. When NFP drops, positive or negative, Powell is going to be looking at a lot of big decisions to make because he now needs to decide, is this the beginning of recession? Because recession, basically now we have all the factors of recession. All that is left, like I say to you guys, is for Amazon at midnight tonight, and I will be awake just to watch that and close my call options if I need to close them to see their data. If Amazon has bad numbers, then we're screwed. Well, we as in the markets, I don't care which side markets go. As a trader, I sell when it's time to sell, I buy when it's time to buy. As an investor, it's slightly different because I know I have to hold until a dip is created. But Powell has to make that decision. So tomorrow's NFP is extremely significant because Powell needs to then decide around raising rates. Now, if we increase rates, which he said he might do in March, and we're getting ahead of ourselves, increasing rates would mean a boost for the currency, for the dollar. Every time you increase rates, you strengthen the currency. Pound FOMC, the Pound Reserve Bank Governor in the UK, increases rates. GBP gets strong. If FOMC Jerome Powell increases rates in America, the dollar gets strong. Now you want to sustain a healthy relationship, because in a recession, if you keep increasing the rates, you also trigger another type of crisis. And Powell doesn't want to be the face of the recession, because that's terrible. I can tell you now, Joe Biden, that 90-year-old old man, does not want to be the face of recession as well, and does not want his administration to be the face of recession, because then it means Trump was right? And no one wants that right now in the market. So finally, in the final, as I conclude our video, and thank you for sticking around this long, when a news event is about to come, like something as big as NFP, here is the assets I want you to start to learn to look at way ahead of time. Don't be shy. Don't wait for ADP. Use ADP to mirror your bias. Like all these stuff, guys, we mark them out. These are the assets. Write them down somewhere. Never forget this, to test your sensitivity to the markets. Euro USD. Why? It is the most liquid asset. It is the most traded asset in the world. Euro and the dollar pit together. So because of that, they have a correlation, and negative correlation, by the way. If dollar is strong, euro has to be weak. And if dollar is weak, euro is strong, something like that. Euro USD is your first chart to always go to start looking at the markets. Pound USD is a trailblazer. So if you read Euro USD first and you read it correctly, you can always move to Pound USD if you're too late to move on Euro USD, because as I've taught before in many of my public lectures, there's something called a primary market that moves first, and then secondary markets that follow. Euro USD is the main primary market. Secondary markets are Pound USD. They're going to follow suit. AUD USD are going to follow suit. You know, all risky asset. NZD USD. This is their leader. Do you understand me? Why, Leroy? Because we are thinking like billionaires. As a billionaire, if the dollar is falling, as a billionaire, I'm going to remove my money from the dollar because it's falling. I'm going to look at gold. I'm going to look at other safe haven assets. The dollar has been falling. Would we be surprised? Would we be surprised? I haven't even looked at it today, but I don't think I'll be surprised if this week there are more green candles in gold than, recently. Oh, sweet. There we go. So 31. This is Monday, Tuesday, Wednesday, right? So you see, the week starts off very strong, and then they smoke out retail traders, look for the lowest demand on the H4 chart, 365. This is simple. Price came back to us, 365. You see this? Why didn't they use this? Because if there are two demands, we will always go for the lower demand. It makes brutal sense. Now, where's price going? Well, let's see tomorrow. Now let's look at the gold chart. Tomorrow is NFP. We know this. We've discussed this. We're a few hours from NFP. This is where gold is right now. Gold is a safe haven. Its value is predominantly when markets are falling. When markets are falling, investors, billionaires will go hide their money there because it is a safe haven. It is very adjustable. If I look at the gold chart on the daily time frame, no time to do top-down analysis, but we did it in the war room on Sunday. Come to our war rooms, please. They are for free. Complain, mentors charge so much money. Nah. I do war rooms for free, and my course is actually cheap compared to what it's worth and what I will be pricing in after I live test all my models. Right, so look at this. Right, we've got the setup here, price leaving a governing demand. We spoke about all this stuff in the war room, so I'm not going to waste time. Let's look at the daily chart, because that's really where all the action is. 24 hours before NFP, this is the gold chart. 24, it's hanging. It's in the middle of nowhere, all right? This is like in the middle, because there's this here, and then there's this bottom there. So price is starting to move in the middle, which is to say it could go down or it could go up, right? Simple, right? My money is if they want to sell, they better come up here and sell, which means between now and getting there, they need to pump up, which means tomorrow might be a big news day for gold, which means if gold is to pump up, money must leave the dollar. Dollar must go down for gold to go up. That means if the charts are lining up for a pump up, I'm not saying they are, I'm going to break down the chart right now, but if the chart looks like it wants to go up and it's a gold chart, and DXY, the dollar, let's split the screen. Let's split the screen because we can, right? If the dollar, on the other hand, is busy breaking demands, gold wants to go up and the dollar is busy breaking demands, we now have another pair that is what? Negatively correlated. So this is the US index. Let's go there. Right. So this demand here has been broken, right? And come on, man. Come on, man. Sorry, can I just quickly remove this? Sometimes I feel like a toddler when I teach because I doodle a lot, and I doodle because I talk fast, and doodling and writing down on whiteboards and all those things slow me down a bit, right? There's a big, some of you have, I don't know if you've noticed a big scar on my head, right? My neural connections work a little bit faster. So I have to find ways to slow myself down so I can communicate accurately. Right, anyways, there we go. So there it is there's that demand being taken out on DXY that we spoke about. And there is gold first breaking a demand and then edging to the upside. So if gold was to come back down from here, do you think there would be anything to catch it? I don't think so. I don't see a demand. But if you look at the overall structure of gold, it looks like gold has decided to break out of this weird triangle anyways, right? So I want to sell gold here at some point. But to sell gold there in the now, I need to get there. To get there, gold needs to be strong. For gold to be strong, dollar needs to keep being weak. For dollar to be weak, tomorrow, NFP needs to be bad. I'm not saying NFP is going to be bad. I'm saying in the scale of probabilities, I would not be surprised if NFP is on the red, but the difference in these numbers are not as drastic as ADP. That's the trick tomorrow. Tomorrow, you're going to get tricked in two ways. Number one, NFP numbers might be okay. We might get 110, 115, 120, but the unemployment rate, which is what a lot of retail traders never check, might be terrible. When that happens, it's like, okay, fine. Some people, the number of people kept their jobs, didn't change much. But more people got unemployed. Then what, right? That's also going to impact the dollar. So tomorrow, please, if you're trading NFP, these two numbers are absolutely important. The average hourly earnings are important, but they really cater more towards inflationary adjustment issues, right? So you can see we've been really jumping towards inflation side, because remember, as inflation increases, prices go up. As prices go up, those at work want more. So this is tracking how much wages are going up. So if you go back to the formula that I created for you a while back, we get a situation that looks like this. Inflation is going up. Prices went up because of printing money. Prices went up because of supply bottleneck problems, because the supply was restricted. But because prices are going up and Powell is no longer printing money and people are being unemployed, and the few that are keeping their jobs are demanding higher wages to compete with prices going up. So all three of these data points come out mixed and very confusing, because if this number is too high to the markets, I'm talking about average hourly workers, it's going to confirm the inflation fear that, damn, inflation is going to go up because wages are going up. Remember, when people have more money to spend, they spend it and prices go up. When prices go up, inflation goes up. If non-farm payroll goes bad, then damn, people are losing their jobs. ADP was right after all, which is terrible for the currency. But if the unemployment rate goes up, so if this number is big, right now they say we want to keep unemployment at 3.9%. That is, we want 3.9% of the people who are able to work and want to work at this level. We don't want this number to go up. We don't want more unemployed people, because more unemployed people is also bad for business. We know it's bad for business because all the maker stock companies are reporting poor earnings. It's just a complicated threefold news event every month, NFP. But once you get the structure right, so DXY is going down, gold wants to go back up. Now let's quickly look at Euro USD, a risky asset. Euro is absolutely strong when dollar is absolutely weak. So yesterday in the Telegram group as well, I was telling them that, listen guys, you know, Euro USD is going to do the exact same thing. It's going to break the supply. I mean, I typed my butt off here. And this is what I'm going to be doing in the private group a lot this year, right? I really want everyone in this group to join the six-figure traders by December. And you know, some of you just joined now, so no, I'm not talking to you. I'm talking to those people who will do a full year in 365, right? Please, there's no shortcuts. I'm not going to make you a millionaire overnight. Do you know why? Because I didn't do it for myself, so I don't know how to do it, right? So there we go, right? Overnight miracles don't work. So we spoke about don't sell here, but look here, no distribution on Euro USD. Why? Because DXY, or the dollar itself, also had no distribution. So price went through the trap. So everyone tried to sell here, and I saw that nonsense yesterday in the public spaces on that volatility group. Everyone saying time to sell, resistance, blah, blah, blah. They all got burnt. This sell here we spoke about in our war rooms 2 weeks ago. We always wait for levels, guys. We always wait for the markets to come back to us. Markets can leave an area. When price leaves an area, they leave money. If I lose up here, I am okay because there's a lesson in it. But it's not because I was immature, ill-disciplined, and impatient for the market. Because selling inside a weekly supply, daily supply is so much better than this daily supply has no confluence. It has no confluence. So we already knew from module 1 rules it was never going to work. Wait, there's no confluence there. Not only that, but where is the supply? Not only that, but you're trying to sell at a bottom out area where they just broke a demand, right? So it's just notoriously a trap for very, 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 very quick pace people. We've got a bullish engulfing pattern on the weekly time frame. All right, which is quite interesting, you know, to say the least. On the daily time frame, we just got a strong big candle to the upside. Tomorrow is NFP. If dollar is weak because NFP is terrible or unemployment goes up, then we're going to get a push to the supply. Then we're going to have to start negotiating which is the best sell. A part of me wants to only sell there at about that 16 something level. I know, you know, on the Telegram, on the master trader spreadsheet, however we've been doing our signals, and I might want to change that if I remember tonight. And if I don't remember, those of you who are listening, where's that spreadsheet of ours? Here, right? So inside the course, inside here, I'm pretty sure Euro USD, I said we're going to sell right there where it would sell, but a part of me wants to wait up. There's just no space, right? This price jumps in here again, we're still going to have a problem of less distribution, which makes me want to even find a higher sell in this area, right? So something like this, something that's almost fresh or very much untouched somewhere up there. That's kind of like my thinking, which means my sell might only get triggered on Monday or something. But if you sell here, hopefully, you know, you can have a very wide enough stop loss, right? But this could work. But like I said, I don't like the lack of distribution. Let's see what the H4 looks like. Okay, so if H4 goes down, all right, at least now it's trading sideways a bit. So tomorrow, if throughout the Asian markets, London session, we can get a Talitha area, then we'll start to have somewhat of a distribution, right? But it might not be the best. So we're gonna have to hang in there for a while. But nonetheless, this is a better sell place than that daily area that existed before ADP. Right, man, look, Euro USD, Pound USD, I'm just going through the charts that I said you should look at. All of these things are telling. You saw how Euro USD has broken this. I marked this up. I did tell you guys I'm marking it up, but I'm not going to sell there. Those of you in the private Telegram group, anyways. But Euro USD has already taken out a similar area, right? So if it's a primary market, we can only imagine this is still going to follow suit, right? If it starts to drop, then, you know, Pound USD does do that. Sometimes it breaks rank, but it won't be a deep sell, right? Something that will happen, giving us better distribution. But the imbalance here was off. So that's why I say don't sell here. If you're in the private Telegram group, you will see we spoke about Pound USD there. Rather come wait here where we were waiting already in the first place. AUD USD. These are all risky assets, right? So look at that. They all have arrived at demand, at supply, sorry, at the same time. No distribution, same thing. So once I understand supply and demand and I get one currency index correct, like the dollar, I know how to trade almost 8 assets. And sometimes to make money consistently in your account, that's all you need. You see why I want to sell this thing? I want to wait for an H4 supply deep in the heavens. And I marked this out in this spreadsheet, almost 2 weeks ago, right? You know what? People are going to be like, he's lying, right? 365 traders, you might witness. This stuff has been online for about almost 2 weeks to a week. And every time I put in a pending order, I write the date, which everyone in our academy has access to, right? So AUD USD, I just want to quickly hurry up, pay for fire, but you get this nonsense. 24 January, 25 January, that's when I put those pending orders, before ADP, before anything, because the distribution was obviously going to push to the upside, right? So I'm waiting to sell right inside there. And so I think, guys, I'd like to wrap this whole thing up, for the most part. Good luck tomorrow. I hope this little rant that I had helped you. Thank you so much for showing up. Those of you who did show up, I thoroughly appreciate that. I hope you learned something, 365 traders and broader community. On Sunday, we'll be doing our weekly traders war room at 4:30 p.m. live on the channel, where we can then start to kind of like assess the NFP damage and then where to operationalize. Those of you who do absolutely everything that I ask of you, I thoroughly appreciate you. And I hope you actually see that in the long run, there are absolute benefits to doing, things the way I say they should be done, because that's how I was taught to do. I can't find it, maybe it's far away, but those of you who actually read Adventures of a Currency Trader by Rob Booker, remember when he goes up to JP Morgan's trading office, during every NFP, those old traders did nothing. They waited for the data. Institutions who actually moved the markets did nothing, waited for the data, went home in the afternoon. Like the story tells us, it's in that book. I mean, I think the book is in the other office or on the bookshelf, back in the bookshelf, I don't know. But the point is, somewhere inside that book, when he goes to JP Morgan and he meets the old guy, all right, Harry, the character's name is Harry. Harry Barnes goes to meet the guy who's going to mentor him on how to trade properly with the whole Euro USD story and NFP coming. On the day of NFP came every Friday, they did nothing. They waited for the data and then made their move after. Retail traders have this terrible culture of loving to time news, right? Easy Forex makes it look cool, and that's perfectly fine. In this channel, we won't even talk about mentors, I'm not about that life. I don't want a trend, all right? What I'm trying to say is avoid that culture. If you're here to trade for the long run and you want to buy your life out of capitalism, wage slavery, and you're here for financial freedom, that is to trade to a point where you can sustain your life, right? A life that you truly want to live. Trading high volatile news events with massive lot sizes always leads to a heartbreak. You cannot have, I mean, guys, on my channel, I've traded live before with you many times last year. On my channel, an hour before NFP tomorrow, if I remember, or tomorrow I'm playing golf anyways. But last year I'll do it. An hour before I'd say, look at Euro USD on the 5-minute chart, 15-minute chart. There are videos of this stuff on this channel. And I'll show you how close price is to a certain area of value when NFP is about to drop. I'll literally walk you through that. But the problem is, just because you know that game plan doesn't mean you can handle the spikes and the emotional pressure that it brings. And because someone, somewhere, some witch many years ago told people that if they use big lot sizes for news events, they'll be rich, there's a terrible culture. Avoid it. There's absolutely nothing wrong with marking levels, say on the 1 hour and the 30 minutes tomorrow, and watching price react to those levels, because the real move is happening on from Monday, Tuesday onwards. Now that we have NFP, now that the data is complete, now that the picture is clear, right, that ADP went up, because sometimes ADP will say it's bad, the markets are bad, the economy is bad, and then it turns out that markets are actually not that bad. All right, and we get a positive NFP. That's happened before. All right, but this is crazy. This is crazy. Coupling NASDAQ, coupling the big four, everything that's going on right now is absolutely crazy. So protect your capital. You want to trade forever, you need capital to do that. There's our NASDAQ. doing its thing. There are a couple of people who are protecting their profits and their buys at about 14,400, right? If Nasdaq breaks that, then officially we're in a market crash. You remember this mark here that I talked to you guys about in the war room was me calculating how far deep we are in a market crisis. When price bounced here, where I told you guys it was going to bounce on the weekly demand, if I quickly go to the weekly time frame, you'll see that for yourself. And when I say I told you, I didn't do this in private, it's in a public war room. The video is there, right? This is a good chart pattern for a rejection normally. Very good chart pattern for a rejection. Nice strong doji. For example, here you had a strong doji, price rallied upwards. For example, here you had a strong doji, price rallied upwards. So we're starting to see something nice. What we don't like is this bearish engulfing pattern, which for very critical smart eyes, people who are following all the rules, if you draw this supply accurate according to the rules that I gave you, would you be surprised that Nasdaq is falling? No, it's touched a weekly supply. It's bearish engulfing pattern. On the fib, when we started this lecture that I'm doing right now, I drew a fib for you and it made contact there. So this is not surprising, right? The price is dropping for now. And we know that our engulfments need to be retested. And that's what's happening right now. The testing has happened, prices drop. So what you want is this to be sustained. Now, I say to you guys on Sunday during the war room that what is worrying is when price breaches 20%. And you see there is a demand here in the daily that catches price perfectly at 20% to avoid that drop. If the 1400 levels fail to sustain and hold, because of Amazon, because of NFP, because of a whole lot of things, then sure, I'll look to not buy there or buy there because that's a perfect place where markets are down falling, right? So just be careful about that. If you're already in it, take profits, don't take profits, lock profits, whatever you decide, just use this information that I'm giving you. Nasdaq should continue falling into the night. And then, slowly but surely, key levels to look out for are 14,500, 14,400, somewhere there. But it's not a good committed level. It's not thoroughly committed. Okay. Now, we used a downward Fibonacci to predict this sell. We used a downward Fibonacci on the daily time frame to predict that sell. That particular sell was in line with what? With go away. This thing is in the way. There you go. That particular sell was also in line with a weekly supply being touched. It was also in line with an H4 supply being tapped. Now, let's say this is the bottom of the crash, 18% down, which is very normal. Where would buyers be waiting for Nasdaq? Draw an upward Fibonacci. Oh, okay. So 14,400 seems to be a good place for this drop to happen. Now, for equities to receive some boost tomorrow, which is so hard to imagine, right? Because I don't even have the Apple numbers in front of me. But for equities, like stocks like this, to actually go, oh, thank God, let's go back up now, right? What needs to happen is a couple of things, and it's going to be based on the data. Number one, you cannot have two masters and serve them equally. That means thinking like a billionaire. So I want to remove the Fibonacci. Right, so you see where the bounce can happen. The bounce can happen somewhere here, right, which is at 14,400, 14,500 level, which is supported by a couple of order blocks, number one, but also number two, a long-term trend line. Where does this trend line come from? I see there's a trend line here to come from the east. Where you coming from, man? All right, so all the way down there from July, right, where price was caught the first time, right? So that might work, it might not work, who knows? Trend lines are just tools. They're not a reason to take a trade, right? But they are order blocks. It is a Fibonacci level, and it might look at this. This is so beautiful on the daily time frame. 365 traders, bullish engulfing patterns, order blocks, blah blah blah. Right? This was never retested, so you get a cool, clean test there, and then markets might, decide to go up with you, right? So what have I done? I've used a bullish Fibonacci. I found a fib level. I found H4 order blocks inside daily order blocks. I've used 365 numbers and basic logic. But for this to hold, the structure beneath all of this must be sound, guys. We need good numbers in Amazon. And if Amazon doesn't do well, we need strong NFP numbers. So the last scenario, everyone thinks NFP tomorrow is going to be terrible because of ADP. Everyone thinks NFP tomorrow is going to be terrible because the analysis and the forecast is already terrible. So wouldn't it be interesting if all of a sudden NFP comes back with 180 and beats 110, 170? That's all it needs. Wouldn't that be funny? Because all of a sudden it's like, haha, suckers, there was a bear market and we get a full retracement, right? But why trade tomorrow if you don't have all the data? I mean, I can run these multiple scenarios, and sometimes I do trade NFP before it happens, right? But I'm just saying, you know, this is just how markets play with your mind. So just look out for that. And I'm hoping I've instilled enough fundamental basis that you understand whichever side the data leans, how the markets will operate. So if you're looking there, then you're fine. And if you bought down there, then you're just holding, you're locking profits for a quick recovery. But it's not a recovery forever, right? There's going to be more pain because there's still a supply to deal with up there. But that would be a good, you know, 800 points, you know, to hold for if it works. But if NFP is flat, Amazon is flat, then, you know, there's going to be hell to pay. There's no way. There's no other way. There's going to be hell to pay. And like I said, a stock market crash is much needed. And like I said in Sunday's War Room, I would much rather buy down there. So if things crash, for me, I'm waiting down there. That's where I'm waiting. But we shall only see tomorrow. Thank you so much, everybody. 365. I hope you guys are doing well. I don't know if there are any questions, but it doesn't look like they are. Thank you for watching on your Thursday evening and allowing me to rant for about 2 hours. I hope you learned something, right? If you're new to the Academy, if you want to join us, I'll drop the link down below. We've got payment plans, you know, whatever, man. If you want to learn, you want to learn. If you don't, and you like the free stuff, you know, I hope it helps you, but I would suggest a structured approach to markets. And then all this extra free stuff laminates what's already inside your mind, right? Shake my hand, everybody. I'll see you on Sunday in the live. This has been fun. All right, I appreciate you. Goodbye and good night. Actually, those of you who are part of the podcast gang, I'm going to go stretch my legs, and I'm going to come back on the live to read the last chapter of The Richest Man of Babylon. My goodness gracious, I'm working so hard for you guys, man. Right, the last chapter, you know, it's about, you know, the city, but, you know, we must finish the book. We must finish the book. And then tomorrow we're starting a new book. Tomorrow in the podcast, we're doing Happy Money by Ken Honda. Podcast is free to stream on Spotify, but also there's always a version of it on the YouTube. Right, everybody, I'm outie. Goodbye and good night. Peace.